Welcome to Telltales. I'm Mike Nicoletti. Every week, along with my co-hosts Jason Wallace and Hunt Lawrence, we bring you the Cash Flow Memo. Get it at telltales.us. For the next 30 minutes, we're going to dive deep into energy, technology, and healthcare. So download the memo now and get started.
The following conversation is intended for informational purposes only. You should always do your own work to determine if an investment is suitable for you.
Let's start on Exhibit C. We'll be quick because the price of oil is hanging in at 61 or 62 for WTI. The positive note is that even with peace in the Ukraine or cessation of hostilities, let's put it that way, the increased production quotas for the OPEC plus countries are not being met. In other words, you get an increase in your quota, but the production hasn't come up. Now, part of that may be scheduling tankers and things like that, but part of it may be that the OPEC plus countries, including Saudi Arabia, are not able to produce up to their new quotas. If that were the case, that would be bullish. That would mean that the surplus capacity of 4.4 last year, 3.3 million barrels a day this year would be overestimate. That would be good because you can see at the bottom, demand has really slowed down. I mean, the 25 demand, and we're all the way through August, is only 500,000 barrels a day off increase from 24. Whereas if you look at 23 versus 22, it was 1,400,000 barrels. The culprit is China. Now look at China in 22, it's 15.2, and then it went to 16.1 in 23, but it's only 16.2 this year. An awful lot of that growth in oil demand is coming from China. It's not here this year. In natural gas production was 106 flat for all 25, but now it's running 107. So that forecast for 26 of 108 is probably on target. The additional gas supply and some slowdown in gas demand, mostly for power. Natural gas use for power is flat, 25 versus 24, even though it had been increasing by about 1.5 Bs a day per year for the last several years. It's flat. I think part of it is coal plants not being retired under the Trump administration, and then part of it is, as time goes on, more and more solar capacity comes on, and there's more power availability. Now, solar and wind is not much more capacity is going to come on because the big, beautiful bill basically took away the tax credits for building that stuff, and without the tax credits, it won't happen. On Exhibit A, the estimated 26 is looking pretty solid, which is a decline in spending from $1.9 trillion deficit to $1.5 trillion deficit. 1.5 is, of course, still too much, but it represents progress, and it's coming in somewhat lower interest rates, somewhat lower all other spending, say 100 billion or 150 billion, which is more or less what the Doge savings was supposed to be, and then another 250 billion or something of tariff revenues. So if this happens, it will be terrific. There is a problem now because before the beginning of the next fiscal year, which is October 1, they either have to do a continuing resolution or complete all the spending bills, and it's quite unlikely. House and Senate are coming back, and they're still talking about a discharge petition, which would take it out of the Speaker's hands to compel the Justice Department to release all the Epstein papers. So, we'll see what happens there, but hopefully they'll get a continuing resolution done by October 1. Mike or Jason, anything else on the macro?
The only thing I'd add is that we've got some more downward revisions in jobs. What was looking previously like the job market was really still quite good is actually sort of faded. And the question is it getting worse or is it getting better now? Hard to tell. It seems that the administration doesn't really trust the data coming out of the BLS. It seems like their methods might be a little out of date for today's market. And, so I think there are probably better ways to track this, but it's something to pay attention to as we move through the second half of the year.
No question. And then, of course, the Fed chairman speech is Friday morning at Jackson Hole, when people will look for him to kind of support the idea, or at least not campaign against the idea of a 25 basis point decline in the Fed funds rate in September. But, I suspect he writes his own speeches, so we'll have to see how that goes Friday morning. Jason, software history, where are we?
Yeah, where we left off was around the time that software is about to make the shift into cloud computing. So Amazon launched AWS in 2006 because they had a glut of computing power for 11 months out of the year. So the Christmas shopping demand drove the sizing of their data centers so as not to lose any sales during the holiday season. But when the demand goes away, they had idle computing power and they decided to rent it out. So originally it was just renting out servers, but they quickly realized there's a business around offering managed software products to IT departments. And that's really the rise of what we think of cloud computing today. So things like setting up a web server or hosting your database became pretty easy tasks using AWS rather than buying a hardware server and setting up the software yourself, configuring it and all that. They had kind of an out-of-the-box solution. And a lot of the initial tools that they offered as products through AWS were those open source software tools that we were discussing last week. So they really took those, packaged them on their own servers and released it as a service. Around this same time, there was a software design pattern emerging called REST. It's really an interface to standardize the way software products request and make data available over the internet. So this is a technique when you build your application programming interface or API, that you've probably heard that term. If you want to make your product available to other software tools, to a business-to-business transaction, typically, you're creating an API that you make available on the internet. So in today's world, if you go to a website and it shows you a piece of AI-generated content, likely that was an API request to Google or OpenAI's tools. Or another popular example would be the ads displayed all over the internet or API requests to Google's AdSense, asking for an advertisement to place on your site so that you can generate revenue that way. So having these cloud computing resources and APIs available ultimately had a huge impact on the software industry. If you were launching a startup, you could now do it with zero CapEx outlay, and then you have a modest operational expense to AWS. And that really facilitated the explosion of startup formation and really what we call today is software as a service, SaaS businesses. And it really launched the mobile app revolution as well, through the 2010s timeframe. So rather than having software installed on your laptop, and you can't do that on your iPhone, say, the software is running in the cloud and you're just accessing all that software remotely. So it's installed on the server and you're just pulling down an interface. So really with that much data flowing over the internet, another big concern becomes security. I guess this would get us to the authentication and authorization layer. So in software security, authentication means you are who you say you are. And authorization is the actions you're allowed to take are in the software are listed and well-defined. So authentication typically happens through a service we call OAuth. You're generating an OAuth token. And what that really means is when you're presented from an authentication service, a challenge for your login, it's a password, a username password, you correctly supply that, you get a token back. And that token has a short lifespan typically. So you're going to maybe minutes up to an hour, and you're going to use that with every request for data from that website. You're going to provide this token, and either it invalidates when you log out of the website, or if you just abandon the website, it expires. So that's how security is handled.
Exactly. Jason, I kind of think of it like a hall pass, right? Like you get a hall pass to go when you're in school to go, to whatever room or whatever from your teacher. That's kind of like that. So that way you're not showing your password to the application constantly. You don't risk exposing that data. But the kind of interesting thing about it is that whoever holds the token can interact with the API for that period of time. So it potentially could be a security vulnerability. And I think that's where you're going with this, right, Jason? The Scepter meltdown viruses, people figured out how to access people's tokens, right?
Right. Yeah. Tokens have to be secured, and they're transmitted over encrypted networks. But if someone was to get their hands on your token, they could act on your behalf. So yeah, those vulnerabilities you mentioned were at the hardware layer, but what they allowed hackers to do was access your token on the memory of a server or your laptop or any computer. And once they had that token, if you had used that token to log into your bank account, now they can take actions on that bank's website on your behalf, which is a big problem. So ultimately, that was a software fix to not allow access to a location in memory on servers that you weren't supposed to access. It was supposed to be protected.
I think importantly, this was a vulnerability for every single x86 CPU. Didn't matter whether it was Intel or AMD. I don't know that it affected ARM chips. I think it was x86 explicitly.
It was x86, and at the time, that was probably 2016, 17 timeframe. The software fix caused a 10 to 20% slowdown in the performance of the CPU, because now it's having to do extra checks on if you're allowed to access that memory.
And Jason and I were in a startup accelerator program with a number of other software companies. And one of the things we learned from some of those companies that were CPU constrained in their AWS instances is that they had to scale up more compute in order to maintain the same level of performance. So essentially their bill got 20% more expensive as a result. And that was a big eye-opener for us, and we used that as an opportunity to establish a position in Amazon. Actually, we did a couple of investments out of that. First was Intel sold off really, really hard at that point in time due to the security threat. But when the solution is more CPUs, it was sort of one of those inverse situations where initial sell-off and then a increase in demand because people basically just needed more compute. And the same thing for AWS, which had never raised prices. That security patch basically was a one-time price hike for AWS. And no surprise, I think the following quarter they had, I believe it was when their AWS revenue eclipsed or AWS gross profit eclipsed the profits they were earning from the retail side of the business.
Right. And Intel showed a bunch of bookings.
Yeah.
Yep.
I was a huge beneficiary at the time. I don't know whether you guys remember, but Amazon would just show their AWS revenue without, I think, breaking out any EBITDA or anything as just other. And I happened to be looking through, I thought Amazon was, possibly inexpensive, and I bought some, and my goodness, it went up like 3 times in 6 months or something, because they finally admitted that line, that kind of catch-all line was really Amazon Web Services. I also remember Jeff Bezos being interviewed, and he said in his experience in Amazon and watching other technology companies, he never saw anyone get a couple of year head start. And he claimed the reason they got the couple of year head start is, Jeff said, we didn't know what we owned. We were just trying to make back some, we had too much server capacity for 11 months of the year. We're just trying to recover some of our costs. And that turned into a business. So not only did other people not know about it, we didn't know about it. It just kind of happened organically. So that's very unusual in technology to get a 2-year head start.
Yeah, and it was critical to end up where we are today, enabling mobile apps and the whole SaaS software revolution.
Yeah. If you look at Amazon now, I know we're switching from software history to early pages, but do you think the value of Amazon's about 50-50 between Amazon Web Services and the rest of Amazon? Or, I mean, it certainly is a big chunk of what Amazon sells for in the stock market.
It depends on how you value Amazon Web Services. You could argue because of its growth rate being pretty substantial, still in the 20+%. Generally, it slowed down a little bit during 22, 23. But the growth rate being that high, that is a very profitable business, and like many enterprise software businesses, this enterprise infrastructure as a service, essentially what it is, has relatively high switching costs for an enterprise to move from one platform to the other. Jason could tell you kind of the headaches involved in actually doing it. Not that it's impossible, but it certainly, Amazon designs their system, and so does Microsoft, so does Google, so that you have a lot of incentive to stay within their ecosystem. So once you land a customer, it's quite valuable.
And they landed most customers because they had the best product for most of those years, probably even still today.
Jason would know about this, but I believe there was one occasion where there was a contract to provide servers for the CIA, and IBM thought they had won the contract, and Amazon Web Services instead was awarded it. And under the Freedom of Information Act, IBM wanted the bid made public. And it turned out that Amazon Web Services was more expensive than IBM, but they were considered that better security. And IBM did everything they could to try to, have that file put away, if not made available for public review. And in your earlier career, Jason, you probably had similar experience at Amazon Web Services. It was considered to be more secure to use Amazon Web Services than to use your own servers.
Right. And it took several years for that realization to come out, because AWS has an entire security team constantly watching all of their servers and making sure they're all up to date with the most current, security profile. And you could be doing that at your own data center, but most likely you're falling behind somewhere. And if they have a vulnerability, that is critical to their business and reputation. So they're going to try everything to prevent that. So it's been more secure for a long time.
For now, we've got to switch to healthcare. I think we're down to about 6 or 7 minutes left. Any worthwhile news to note in the last week, Jason?
There is a bill working its way through Congress called the Patients Deserve Price Tags Act. It's around price transparency at hospitals. It'd be a very important thing. It'd be great if that passed. Let's see. The FDA also has been releasing complete response letters. So essentially drug rejections for applications for approval to the agency. They released a lot of that data to the public, and there's kind of calls around the FDA to release more of their regulatory submissions and applications publicly as well, for maybe some businesses that the applications failed, the business went bankrupt, there's no IP attached to it any longer. And really the goal I think the goal of all of this is to have it in the public domain. You can then train language models on this kind of thing, and then the regulatory burden for bringing your drug to market becomes reduced, because your language models can then help you, where expensive consultants took months to do, put together these packages and responses to the FDA. And now you can have a language model, an AI do it, or assist you in doing that on a much shorter time frame. An interesting thing out of Eli Lilly, they have came out, at least one exec has publicly came out in support of the most favored nations arrangement that the Trump White House has floated. So I think they're trying to hope they can realize more profit out of Europe rather than reducing costs here.
We should turn to page 3, because there's a lot of Intel news. And just to recapitulate, I think we mentioned last Wednesday or the Wednesday before that the CEO of Intel, newly appointed, at Garrity's place, was pulled out by a Republican senator for being too tied to technology business in China. And in fact, he had a venture capitalist been on the SMIC board. The SMIC is the Chinese equivalent of Taiwan Semiconductor. Been on the SMIC board for 18 years. And of course, Trump picked it up in a Truth Social post saying he should resign immediately. And if you're a Intel stockholder or a board member or whatnot, he does have a plan, and he seems more than qualified to try to pull Intel out of the ditch it's in. And what in the world is going on here? Mr. Tan then visited the White House and apparently patched things up a bit with the president. And now the U.S. government, which has a commitment, pre-existing commitment from the Biden administration, put up another $10 or $11 billion in supporting Intel building out projects in the U.S., is now talking about somehow turning that into an ownership interest in Intel. Now, Mike or Jason, what have I left out in that introduction to the current Intel situation? If I misstated anything or left anything out, or
The one thing I would add is that this is all sort of coming on the heels of the last earnings, and in their 10Q, they basically disclosed that it is currently probable that they may not proceed with their latest leading edge node. And that was kind of seen as a surprise. It was a disclosure in the risk sections in the 10Q that most people gloss over, but it's important. And during the earnings call, CEO Lip-Boutan discussed this, in that if they didn't have a customer to help them share the cost of that next node, it wouldn't make financial sense for them to continue with it. And they would likely just have to have Taiwan Semiconductor manufacture their chips. So what we're seeing is that semiconductor manufacturing is a scale business, and Intel's scale, which used to be considered huge, is no longer sufficient to support its own fabs. They need external customers. And I think this whole deal comes together in a way that the federal government guarantees some level of purchasing, or maybe their tweaks to the tariff rules will support Intel's ability to be more competitive with the Taiwan Semiconductor fabs.
with the tariff, do you think?
Potentially. It could be tariff, could be other. I mean, this administration is certainly getting creative when it comes to these things. We all saw the 15% fee being paid from Nvidia to the federal government for chips being sold in China. So I think with Trump, everything's on the table. The positive thing about all this, I think, is that the Biden-era CHIPS Act was destined to fail, because it did not require Intel to do anything too specific with the money. It guaranteed that it would get lit on fire. And a lot of people said that, pointed that out at the time, but that's the way it got structured. So let's hope that whatever they set up is actually better for Intel. So time will tell.
Nathan, what do you think of the export tax? It's not even clear that the administration has the authority to do it. I guess there's a logic to it. The way I would work out the logic to the export tax on Nvidia chips into China is that somehow the more advanced chips, the Blackwells and H100s, were finding their way into China. It wasn't just the H20s that are dumbed down and where Nvidia had clearance to ship them. And I think the administration's position is, and certainly Jensen Huang's position is, if we don't ship Nvidia chips or ADM chips or whatnot into China, then somehow Huawei will figure out how to make them. and then China's a little less dependent on us, so that we have less to trade with. I mean, when we were no longer getting shipped heavy, rare earth magnets, it became a big problem for us. Well, the trade apparently was to, you can have more H20s if you can straighten out, shipments of heavy rare earths into the U.S. So I suppose having agreed to do that and maybe thinking that was in the national security interest, maybe you somehow you justify the export tax. But I mean, Jason, you're not a person that, or Mike or myself, a person that thinks, kind of industrial policy, from the top down makes too much sense. But the Trump administration seems to be heading off in that direction at times.
Yeah, and I don't know what the goal of that excise tax is. The tariff was not popular, so he's just going to tariff Nvidia chips specifically. I don't know. It doesn't seem like it accomplishes a goal.
Yeah. Any other news on page 1, 2, or 3? We've been focusing in on Tesla, but Tesla's been kind of on the quiet side in the last week or so.
Yeah, they launched a new model, the Tesla Model Y Long, or YYY, I think is what they're calling it. It's a 6-seater version. This kind of extended wheelbase must be. So that's sort of interesting. The other news item is we're starting to get data on cost of ownership for the next generation, the GB200 series of data center chips, and comparing those to the H100. And there's a good semi-analysis article that actually came out this morning, compares those and basically computes that the GB200s, which aren't in production for training or inference yet, they're still being set up by the earliest purchasers. The total cost of ownership is about 1.6 times higher than total cost of ownership for the H100. So what that tells us is that the chips will have to be 1.6 times faster or produce tokens at a faster rate than the H100s in order to justify the value. And we will be watching the data as it comes in and different benchmarks in order to see how much better the GB200 is than that 1.6x.
How about the software side? I mean, Salesforce seems to be lagging a little as I look at, quarterly reports and also the behavior of the stock. Are they kind of making commitments in terms of working AI into their, what they offer to their customers that they're having trouble executing, or how, what are the two of you think is going on with Salesforce?
Yeah, there's different stories coming out, and one, I'm not hearing a lot of commercialization of their AI tools. I could be wrong, but I just haven't heard that there's a lot of adoption. But internally, Mark Benioff says that AI is doing a third of the work at Salesforce now. So they're seeing extreme productivity out of it internally, but maybe people aren't purchasing the AI tools outside of their business. Another data point we have is from ServiceNow. Their CEOs has said that AI has cut their OPEX budget by 5%. So real cost savings there. And ServiceNow, I think, is having some traction selling AI powered tools for their SaaS product.
Yeah, Mike, I've never been able to understand exactly what Snowflake does. And I know you and Jason have spent time on it and they own a research position, but how would you characterize Snowflake's position vis-a-vis AI?
The value to the enterprise is that they've got all these disparate systems that produce data. One of them being Salesforce. So this sort of ties back to Salesforce. And oftentimes that data in Salesforce is a little dirty because you have salespeople that enter stuff in, there's duplicative information and all that stuff.
And in the early days when Snowflake was gaining a lot of adoption, it was difficult to run business intelligence tools over huge sets of data.
So you typically have a process that pulls your Salesforce data, maybe your order management data, different systems within maybe your ERP data, all those systems into one, so you can do this unified data analytics. Before Snowflake, those were really patchwork systems. I actually implemented one at KVH using, well, initially Excel to do it. And it's a problem that pretty much every business has.
And Snowflake solved this. So now you can run your business intelligence over all of your data and get consumable reports out of it. As it's evolved, it became essentially your source of truth, the database where all your data existed, all your important data, and it could live across different clouds. And now it's becoming the place where you keep your data that is training your AI algorithms. So Snowflake is layering on a variety of the AI algorithms available. I don't know the total set, but it includes OpenAI's, and you can train specific workflows on just your data in your enclave there.
And to Jason's point, it is the natural place to implement your AI algorithms because you already have the right data there. And I actually think that's why Salesforce is sort of struggling on the AI front, because everybody knows their Salesforce data is dirty.
Interesting. We've completely run out of time here, but I think as we complete or do more software history, we ought to circle back and talk about those three companies, Salesforce and ServiceNow and Snowflake. I think I'm kind of getting a sense that Snowflake might benefit as you start to use AI tools on your database. But more next week. In the meantime, everyone be well and stay healthy, and be here exactly 7 days from now. Take care, everyone.